Recording. Perfect, the recording is on now. So once again, welcome everyone. This will be today's Wednesday session. And the topics, as I said, will be a higher time frame directional analysis and the current price action analysis, because I believe that will be helpful in the current situation, because the price action is, as I said, terrible today and these days. So yeah, a little hand could lend you some help. So let's begin the analysis on the 4-hour chart. Just one more confirmation if you can hear me well, see my screen well, and everything is fine. Just one yes.
Yes.
Yes, okay, perfect. So let's start the overall analysis on the 4-hour chart. Okay, we talked about this price action several times in the past, right? We all know that price created this supply zone up here, created a break of structure, break of the range down here. After a break of this over range and structural swing low point, it just mitigated the supply zone that has created the overall order flow that was leading to a break of this range. And after the mitigation of this supply zone, price swept the supply zone and swept the equal taps from above the supply zone, because there was the first tap, second tap, third tap, little pullback, little change of character after the mitigation of the supply zone, sweep of that liquidity. And after the sweep of this liquidity, after this liquidity sweeping week, price just created a bearish order flow to the downside. So the bearish order flow has been continued. We are still in an extremely bearish order flow. Let me just zoom out and show you the overall order flow. So as you can see, in this region, the order flow is extremely bearish, right? It's unarguably bearish. Price is creating huge high volume movements to the downside over and over again. Everywhere high volume movements to the downside, as you can see, it's the same pattern over and over again. Price creating small volume, little pullbacks to the upside and respecting supply zones after the pullbacks. As you can see, the same pattern goes on and on, creating small pullbacks, high impact volume movements, small pullbacks, high impact volume movements. And as I said, price keeps respecting supply zones over and over again. So as you can see, supply respection, supply respection, supply respection, supply respection. And this pattern goes on and on and on. But here's a question. When will this pattern be stopped? What could be the possible reversal point in the future? What could be your overall target point, your overall demand target point, the higher time frame demand target point? If I switch to the daily chart and zoom out, you can see that price is actually doing this pattern on the daily chart too. As you can see, it's keep creating high impact movements to the downside, small pullbacks, not as small pullbacks as on the 4-hour chart, but creating pullbacks, respecting supply zones over and over again, respecting supply zones. And if you take a look at this price action, we could say this is the current price action from 2018. This was the top from 2018. Price created this movement to the downside. Price created this movement to the downside and couldn't break below the last low point, as you can see. This was the last structural swing low point. This structural swing low point created a pullback after the break of structure to the downside. Let me just zoom out a little bit and you will see it better. So this was the last strong high point in this case, as you can see, because this strong high point could break below the last week low point. This was the last week low point, created a huge inefficient movement to the downside on the daily chart, created this huge inefficient movement to the downside, broke structure, and after this structure break, created a new week low, because this week low couldn't break above the last strong high point, as you can see. So this means this low point, this daily low point, will be weak low point. And as you can see, price reacted on some supply area right here. If I zoom in, you'll see it better that there was a supply area on the daily chart. There was price was reacting on. This was the high point. As you can see, here's a perfect supply zone, daily supply zone. The price was reacting on. I will just delete this line and extend this zone. As you can see, price reacted on this supply zone. Actually, that price created a change of character on the daily chart here, change of character, reaction on that supply zone that changed character to the downside. I will zoom in and you will see that much clearly. So here was a change of character, mitigation of this zone, change of character to the downside here, mitigation of the daily supply zone that has created a change of character, mitigated the supply zone and started the order flow again, the overall bearish order flow again. So this is the pattern that goes on every single time frame, on the weekly, on the daily, on the 4-hour, and the 15 minutes. So basically, this is our main trend movement. Okay, so as you can see, after the mitigation of the supply zone, price couldn't break below the last weak structural low point. This was the weak structural low point that couldn't break above the high point, right? I will just mark it as weak so you'll know it better. This was the last week, and up here, that was the last strong high point. So why am I saying that it's weak? I'm asking you that why am I saying that it's weak? Please, just a quick answer. What just happened with my chart?
You got muted when you were talking.
Sorry?
Yeah, when you asked the question, you got muted. Your mic didn't work for some seconds.
Really?
Again.
Yeah.
Oh my God. Sorry, guys. Okay. Where is the chart? Where am I? Okay. Here we were. Okay. So my question was that why am I saying that this high point is a weak high point? Why is it a weak high point? Can you hear me now?
Yes, it's because
okay,
it doesn't create a new low. Yeah.
It couldn't create a new low. That's right. This is a weak high point because it couldn't break below the less weak low point. So this means there was no any break of structure. Actually, price, instead of creating a break of structure to the downside, just reacted on some demand area right here. So there was maybe a weekly or a monthly demand zone that price was reacting on with this movement, changed character to the upside, and started the whole bullish order flow to the upside. But if I zoom in, you'll see it better that this bullish order flow to the upside. So this bullish order flow couldn't break above the less weak high point. So this means we have 3 structural weak points. The only strong point in this case will be this one up here, but all of the structural points will be weak below it. This is a weak low because it couldn't break above the less strong. This is a weak high because it couldn't break below the last weak. This is a weak low also because it couldn't break above the last week. So all of the structural highs and lows will be weak in this case. So it's really, really hard to tell that what will happen after the tap of this daily demand zone, because price actually respecting supply and demand zones over and over again, creating this pattern that respecting highs, respecting lows, and basically ranging on the daily chart since 2017. Since this point, price is just ranging, respecting highs, respecting lows, respecting highs. So let me just zoom in. And you'll see that clearly that price was reacting on a supply zone here also, on a weak high supply zone. So as you can see, this supply zone here started the whole inefficient push to the downside on the daily chart. As you can see, this is a pretty clear daily supply zone. If I extend this, you'll see that price reacted on this supply zone, and after the reaction, it changed character. As you can see, it changed character on several places. Here. All of these movements for daily character changes. After this, price broke structure to the downside here and mitigated the supply zone up here that was leading to a change of character to the downside. Mitigated the supply zone and started the bearish order flow to the downside. That's why I'm saying price is actually extremely bearish on the 4-hour chart and on the current price action on the higher time frames, because these movements, these higher time frame movements created by this structural high point, this structural order flow leading high point, are bearish structures, right? This is a bearish structure. That's why I'm always saying your main trend is still bearish, because if price keeps respecting supply zones over and over again on every single time frame, on daily, weekly, 15-minute, 4-hour, on every single time frame, our pro trend will be bearish. Our pro trend is extremely bearish. Okay, but as you can see, we can identify the demand zone right here and the reaction on demand zone right here. Actually, there won't be a clear demand zone in this case. I don't really want to find it. But let's say this is a weekly demand zone. Let me just switch to the weekly chart, and you'll see that here's a weekly demand zone. Yes, this will be our weekly demand zone that has started the inefficient push to the downside. Switch back to the daily. As you can see, price reacted on this daily / weekly demand zone here, couldn't give enough power to price to break below this demand zone, but also couldn't give enough power to price to break above this supply zone and create a character change to the upside and continue the overall bullish order flow in this case. So the bearish order flow has been continued, as you can see. What am I doing? Sorry. So the bearish order flow is being continued in this case, as you can see, because price couldn't change character here to the upside after the mitigation of this weekly demand zone. And instead of changing character to the upside, it just broke below this demand zone, as you can see with this movement. This is our current price action movement. This is our current price action movement on the 4-hour chart that we're talking about several times. But this movement to the downside not just created break of structure to the downside, it swept liquidity from below this demand zone. As you can see, there's a bunch of liquidity sitting just below this demand zone. First bottom, second bottom, third bottom, blah, 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 blah. Loads of liquidity sitting just below this demand zone, indicating the price down to this daily demand zone here that has started the overall higher time frame bullish order flow to the upside in this region. We will talk about this demand zone too, but let's finish this demand zone and this reaction on the demand zone. So this will be a confirmation. This break of structure to the downside will be a confirmation for the continuation of the bearish order flow down to this daily demand zone, because price reacted on this demand zone. Price reacted, rejected, created a recovery on this demand zone. And after the recovery, it swept the liquidity and broke structure to the downside. If price sweeps the liquidity, after the liquidity sweep, price could just easily reverse to the upside and continue the bearish order flow to the upside. But instead of continuing the bullish order flow, sorry, instead of continuing the bullish order flow, price just created another break of structure to the downside here at this point. As you can see, it's a clear body break to the downside. This week wasn't a body break. This wasn't a break of structure. The break of structure happened from this candle, as you can see. This is a clear body break to the downside. So if price created a body break and break of structure to the downside after the first daily break of structure to the downside, what can we expect? We can expect a deeper pullback, right? We can expect a pullback on a daily or a 4-hour supply zone that was leading to an overall break of structure to the downside, because this is how market is moved. Inefficient movements to the downside, pullbacks, reaction. Inefficient movement, break of structure, pullbacks, reaction. Inefficient movement, break of structure, pullbacks, reaction. This is how market is moving right now. This is our overall pattern. So if we can find a good turning point somewhere around here, some sort of demand zone in this region, or some sort of 4 hours demand zone, we can expect a good pullback. We can expect a good reversal up to some sort of supply zone. But if price reverses on some sort of demand zone in this region, this will be a counter trend movement up to this supply zone. This will be tradable, and this will happen for sure. Price will react on some sort of demand zone here and will reverse and will tap the overall 4-hour supply zone that has caused the break of structure to the downside. This will happen for sure. I'm pretty positive about this movement. But all of these upside movements, all of these long movements up to the supply zone will be counter trend movements. Okay, actually, let's find that counter trend movement. I mean, let's find the demand zone that could lead to a counter trend movement on the daily chart. As you can see, let me just place a horizontal line here, and on a daily chart, there's no demand zone. There's no demand zone, as you can see. So price actually reversed in the middle of nowhere. With this movement, price was reversed on the middle of nowhere. So let's just switch to the 4-hour chart and let's find the demand zone that was leading to a reversal. So this is our line. Let's find for a good demand zone. And as you can see on the 4-hour chart also, price did not tap into any demand zone in this region. It basically reversed in the middle of nowhere between this demand zone and this demand zone, reversed in the middle of an inefficiency. So what can we expect in this scenario? We can expect a deeper demand mitigation, and the only deeper demand in this area will be this one, because as you can see, this demand created a huge inefficient movement to the upside on the 4-hour chart. This is one huge inefficient movement on the 4-hour candle chart. Broke structure to the upside here, swept liquidity here. So this will be a pretty valid demand zone on the 4-hour chart, and we can expect the tap of this demand zone. We can expect the mitigation of this 4-hour demand zone. Let me just extend this zone. So this could be an indicator for price. This could be our next possible short target point. If price creates a pullback here, and reverses in some sort of supply zone, we will talk about the 4-hour chart also, reverses in some sort of supply zone, for example, this one, or this one, we can target this demand zone as our next target point. This will be our next target point. Okay, but also if this will be our next target point, let me just switch back to the daily chart. Also, if this will be our next target point, this will be our next reversal point too for the upcoming long counter trend trades. So if price steps into this demand zone, we'll be able to look for a long opportunity on this demand zone, a reversal point, 4-hour change of character, 15-minute change of character, blah, blah, blah. And we could aim for a higher daily demand or 4-hour demand area. I mean supply, sorry. We could aim for a higher 4-hour daily supply area. For example, this one. This could be a pretty good daily supply area. As you can see, this supply zone created the first break of structure with weak break, broke below this 4-hour flip zone, created huge inefficient movement. It has been left unmitigated, built up liquidity for this zone. So if price taps this demand zone down here and reverses on this demand zone, this could be your next target point with the longs. If price can't reverse on this daily demand zone, we can just simply aim for the origin of the overall order flow down here, which is the origin of the daily order flow. I will talk about this now. I'm going to ask if everything is clear. Am I going too fast? Am I going too slow? Could you understand everything? All clear?
Yeah.
Yes.
Yes, perfect. Okay. So let's just take a look at this daily order flow starting demand zone right here. As you can see, price has created the last break of structure to the downside with this movement. Actually, this was not a break of structure, this was a change of character. Price was creating a bearish order flow in this region, created this last low point, broke structure to the downside, and after a reaction on some sort of demand zone in this region, price reversed, immediately reversed to the upside. As you can see, we are still on the daily chart. Price created this huge inefficient movement to the upside that has changed character here, on everywhere, right? But after a change of character, price didn't respect the demand zone that was leading to a change of character here. Instead of respecting that demand zone, it just changed character to the downside again. As you can see, this was the supply zone that was leading to a change of character. This supply zone, let me just mark it out, or with the box that will be much cleaner. This supply zone, this daily supply zone, was leading to a break of structure and a change of character to the downside. Okay, here was a change of character to the downside. And after this, price respected this supply zone here, but couldn't break structure to the downside again with this movement. Instead of breaking structure to the downside, it just blew above this supply zone. As you can see, it was struggling to break structure to the downside, tried 3 times. First try, second try, third try. And after this, price couldn't give enough power, couldn't collect enough fuel, and couldn't break below the structural low point. Instead of breaking below the structural low point, it just blew to the upside with this movement. And all of this movement, all of this supply breaking movement started from this candle, from this daily demand zone. If I zoom in, you'll see it clearly that the overall inefficient movement, the overall inefficiency, as you can see, here's the first inefficiency, and the supply breaking movement has started from this daily demand zone. So this is our final target point. This is our final indicator for price. This could be our final target point for shorts. This could be our possible reversal point for longs. So now that we cleared all of this, what can we expect on the daily chart? As I said, we can expect a reversal on the 4-hour chart in this region, some sort of 4-hour supply tap, just a small pullback to the 4-hour supply zone. Respect that 4-hour supply zone, continuation of the overall bearish order flow, tap into this daily demand zone. Change of character on this daily demand zone on the 4-hour chart, on the 4-hour chart, daily chart, on any chart, on the higher time frame chart, and the continuation of the bullish order flow from this demand zone partly. So demand will be controlled partly after the mitigation of this demand zone until it mitigates a new daily supply zone or 4-hour supply zone. So we can expect the tap of this zone. We can expect a reversal on this zone. We can expect the higher time frame supply mitigation. After the higher time frame supply mitigation, we can expect the tap of this downward demand area, because this is our origin of the whole bullish order flow. Let me just zoom out again. This is the origin of the whole bullish order flow. And this order flow, as you can see, has started from this point. This small daily doji candle started the whole order flow. So price will just levitate back down to this daily demand zone, because it has to fill up the inefficiency. It has to fill up all of this inefficiency. As you can see, basically all of the charts, all of the movements in this region are efficient. Everything is efficient, right? Inefficiency filled up with this movement. 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 Inefficiency filled up. Inefficiency will be filled up after the mitigation of this demand zone. Inefficiency will be filled up with maybe in a couple of weeks, but this inefficiency will be filled up because every price action is efficient in this region. Expect this one and this one, of course, the first freshly created price action. So price will tap this daily demand zone down here. And after the mitigation of the daily demand zone, this will be a bias decider demand zone again. This is a higher time frame, daily, weekly, monthly bias decider demand zone, because if price breaks below this demand zone, I believe the continuation of the bearish order flow will be continued. But if price can react on this demand zone, I believe price will fill up the inefficiency in this region and react on some sort of supply zone. some higher time frame supply zone in this region. Okay, all clear? Can you follow me? Can you understand me? Make sense? Everything makes sense?
Yes.
Yes.
Perfect. Thank you. Let me just drink water. Okay, so let me just switch to the 4-hour chart and actually start the analysis on the 4-hour chart. We talked about the higher time frame intentions. We know why price is heading actually. We are heading down to this daily demand zone. And actually, I've told you this movement that it will happen back in maybe August, somewhere around here. I was expecting the tap of this daily demand zone back in August, somewhere around here. I told you that price will tap this daily demand zone. And as you can see, the order flow is being continued. Okay, but let's just continue the analysis with the 4-hour price action analysis. So what can we see on the 4-hour chart? As I said, we talked about this price action several times in the past. So let's just focus on this price action. What can we see right here? I'm asking you to draw on my screen and draw some supply zones out. Okay, that could be the first one. Liquidity, perfect, nice. Go ahead, keep going. Perfect.
Daddy.
Liquidity, perfect, yes. And basically that's all. You did a great job. I can't understand this yellow line here because this supply zone, sorry, please can you just remove this drawing, this yellow line? Thank you. So basically this supply zone up here, please just remove the drawing or I will just remove it. Okay, perfect. So this supply zone up here has been mitigated already by the price action in this region. So this supply zone is mitigated, but this supply zone built up liquidity here. As you can see, this is a huge liquidity trend line. Trillions and trillions of dollars are sitting above this trend line. Loads of stop losses sitting just above this trend line. And these stop losses will be taken out on the way up. I'm not saying that it will be taken out now. On the way up, if price reacts on this demand zone or this demand zone, this liquidity, these supply zones could be taken out. But I believe price won't just come back up to this supply zone and this supply zone and won't just take out the liquidity from this region from this point, because that will be surreal. That won't be real. Price has to react on some sort of demand zone and give fuel to price to actually liquidate the liquidity from this region. So price has to react on some sort of demand zone. It won't just reverse at this point and come back up to mitigate this supply zone and take out the liquidity. I believe it will come down to this daily demand area first. After the mitigation of the daily demand area and change of character on the 4-hour chart, we'll be able to see a higher time frame, higher supply mitigations here, somewhere here. But until this daily demand zone has not been tapped yet, I won't believe that price will just reverse in the middle of nowhere here and mitigate the higher time frame supply zones up here. So let's just continue the overall analysis on the 4-hour chart. Okay, as you can see, let me just switch back to the daily and mark the demand zone out because we had a clear demand zone right here in this region. So as you can see, this was a clear demand zone. We've talked about this several times. I even sent you this in the week breakdown video. So this is a clear daily demand zone that has changed character on the daily chart with this movement. This was the origin of this order flow. This was a character changing movement on the daily chart too. Price change character here, swap the liquidity from this region, tap the supply zone. So this is a pretty valuable demand zone on the daily chart. Okay. After this price, as you can see, broke below this flip zone, below this 4-hour flip zone. We've talked about this flip zone several times again. I won't just do it again. The overall break of this flip zone has happened from this supply zone here, as you can see, because price reacted on this demand zone. This was a reaction candle. Tap the zone, created a reversal inside of this candle, the same candle. Here's a reversal. And from this candle, it immediately broke below this demand zone. So it flipped the flip zone, as you can see. Okay, price was reacting on a 1-hour supply zone right here, or a 50-minute supply zone right here. Did not tap the overall 4-hour zone. But this gap was powered by the war crisis, as you may know. So let me just break down this movement here. So this is our daily demand zone. Price tapped this daily demand zone with this movement, swept the liquidity from below this demand zone with this week, as you can see. This wasn't a break of structure. This is not a break of structure because it has to break with body below this structural low point and demand zone. This was just a liquidity sweep movement. After a liquidity sweeping movement, price created an upside movement and couldn't break above this supply zone. So basically it respected the supply zone. So this supply zone was being respected. After the respect of this supply zone, price created a break of structure. Here was the real break of structure because, as you can see, with this gap, price actually broke below the structural low point here and broke below the daily demand zone with a body break. This was a body break movement. So this was a real break of structural line. And this break of structure has happened from this candle with a gap, right? This was the 4-hour supply zone that was leading to a break of structure and the break of this demand zone. And of course, this is one more confluence. The price has to fill up this gap and tap into this supply zone. And that's exactly what happened because, as you can see, price filled up the gap. There's no gap anymore. The gap has started here and ended here. And price filled up the gap with this movement. So the gap has been filled up perfectly. Okay, price tapped into this 4-hour supply zone and reversed immediately, as you can see, and created a break of structure to the downside again. Because as you can see, this is a break of structure. This was the last structural low point, and price broke structure to the downside with body break. So this is a break of structure on the continuation of the bearish order flow. Okay, but also this continuation of the bearish order flow has built up liquidity in this region. As you can see, this is a not big, but a small liquidity trend line. This is a small liquidity trend line building up supply chain, respecting supply zones, breaking structures, respecting supply zones, breaking structure. This is a supply chain. At least we know that there's a liquidity. Okay, after this, as you can see, price created another break of structure here to the downside with body break again. This is a body breaking break of structure to the downside again here. And all of this movement has started from, sorry, let me just adjust this break of structure. All this movement has started from this candle here, right? Or you could even say that started from the candle above it. Which one would you choose? I'm asking you guys, which one would you choose for your right supply zone? This one or the upper one? The upper one is the, let me just, upper one, okay. Anyone else? Which one will you choose, the upper one or the downer one? Nabab will choose the downside candle. Anyone else? Let me hear your opinions.
The downside candle is the black one.
Downside candle?
Yeah, wait, I'm going to draw on it. The same
I know,
as
no,
Nabab.
this one.
Yes, this
From
one,
the
yes.
upper one.
Yes.
Okay. Engulfed. Exactly. It has been engulfed, but the inefficiency has started from the upper one. There's not much inefficiency. Actually, there's no inefficiency. There's not much of inefficiency, as you can see. But to be more precise, we can mark the downer, the downside candle out as our right supply zone. Because if price reacts on this supply zone, if price gives a reaction on this supply zone and changes character in the 15-minute, that 15-minute change of character might not be tapped by this zone. So let me just read the comments. The one that you choose, if it created liquidity in the lower term and downside. Yeah, all we have to, okay, let me just tell you something. All you have to do in this scenario is to switch to the 15-minute chart. Let me just switch to the 15-minute chart and identify if there's a clear 15-minute supply zone inside of that 4-hour supply zone. Let me just mark both supply zones out. This is the easiest scenario to identify the good supply zone. So both of the 4-hour supply zone has been marked out. As you can see, let me just see the first one. Inside of the first one, there's no clear 15-minute supply zone has been formed. So basically, there's no clear supply zone. As you can see, all of the price action has been mitigated. This supply zone 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 has not been mitigated, but it did not break any structure. As you can see, this is the last structural low point. And this didn't break any structure. Wait a minute, please, Nabab. This didn't break any structure. So basically, inside of this upper supply, there's no clear 15-minute supply. Let me just see the other one and remove this one. Take it back here. I don't know how it was actually. So yeah, this one. Inside of this other downer 4-hour supply zone, we can identify a clear supply zone, right? We can identify this supply zone as our clear supply zone. Because this supply zone has created inefficient movement to the downside here, as you can see, and actually broke structure with a big break here. this will be a big body break on the 5-minute chart. So inside of this 4-hour supply zone, we have a really clear 50-minute supply zone that was price reacting on recently, as you can see. And I can actually refine this zone on the 15-minute chart, and price perfectly tap this zone on the 15-minute chart, as you can see. This is the 15-minute tap. And as you can see, below this 50-minute and 4-hour supply zone, there was liquidity. Here's liquidity built up for this supply zone. You could say that this supply zone has been mitigated by this candle, right? But this is just a 1% mitigation. This didn't mitigate the actual week. This didn't mitigate the actual week right here. Just a 1% mitigation. This won't be a clear mitigation. Okay, but actually, this is the right supply. So yeah, that hasn't been mitigated yet. So this is not a mitigation. Price built up liquidity here for this supply zone. Price swept that liquidity to the upside and tapped into this supply zone. This was a tap, right? We will see the down lower time frame too, but let's just continue with the 4-hour analysis. So we just identified that this will be our right 4-hour supply zone refined on the 15-minute chart. So this is our right 4-hour / 15-minute structural, supply zone. Let me just read the comments. Isn't that zone part of the liquidity? Which liquidity you mean? You mean this liquidity here or here? That could be the liquidity, but we are always marking our most recent supply zones out. This is our most recent supply zone that is creating a break of structure, inefficient movement, liquidity sweep, created liquidity. So this is the less recent valuable supply zone for us. If price can give a reaction on this supply zone, if price can change character on the 15-minute chart and change character on the 1-minute chart, we can enter in a short trade. But if price just simply breaks above this supply zone, we will be able to target higher supply areas. All you have to do is react on the most recent supply zones, right? Why would you confuse yourself by marking out several supply zones? I can literally mark out infinite supply zones in this region. I can mark out every single supply zone in this region, but that will be pointless. I'm just marking the less recent supply zone out. And the less recent supply zone is this one. We are expecting a reaction on this supply zone. If price gives a reaction on this supply zone and creates a change of character on the 15-minute chart, we are riding the short expectation order flow. If price breaks above this supply zone, we are riding the long expectation order flow. All about reaction. Okay, but let's switch back to the 4-hour chart and identify other supply zones. And the other supply zone above this supply zone will be this one. As you can see, this created another break of structure to the downside. Here was a break of structure with inefficient movement, and it has liquidity. This could be liquidity for this zone. That's why I'm saying that we should wait for a reaction on this zone. If price breaks above this zone, we'll be able to ride the order flow up to this supply zone. If price gives a reaction on this zone, we'll be able to ride the short bearish order flow to the downside down to this demand zone. It's all about reaction. Mark your less recent supply zones out and wait for reaction on those supply zones. Okay, so I believe that's all about the 4-hour chart. We marked out the less recent supply zone. We marked out all of the breakout structure. We marked out all of the demand zones, the possible target points in the future. We marked out all of the 4-hour reversal points. We are expecting a reversal on. So yeah, let's switch back to the 15-minute chart and let's see the 15-minute analysis. Okay, so we are currently focused on this region. We don't have to focus above the region because that's too far away. If price breaks above the supply zone, we will focus on this region. But until it's respecting this supply zone, we just have to focus on this price action region. But for clarity, I will just mark out the liquidity here, and I will just read this huge liquidity line because it's confusing. This is a liquidity built up for the upper 4-hour supply zone, as you can see. This is liquidity. This is liquidity built up for the upper 4-hour supply zone. This will be liquidity, part of the liquidity too. We have to wait for a reaction. If price can give a reaction, blah, 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 blah. I've told you this several times already. I will just remove the 4-hour breakout structure lines because they are confusing. Okay, I'm asking you guys, what should we wait for? What are we waiting for on the reaction on this zone? What should be our next step?
1-minute choke.
5-minute church.
15-minute chart.
Minute.
That's the correct
15.
answer. Finally, that's the correct answer. We need a 15-minute change of character, not a 1-minute change of character. We are okay, guys. We are still in the 4-hour zone. This is still part of the 4-hour zone. Price is coming from an unmitigated 4-hour zone. If you're refining a 4-hour zone to the 15-minute chart, that 15-minute zone will still be a 4-hour zone. You have to treat that 15-minute refinement of the 4-hour zone as a 4-hour zone. So we still need a 15-minute change of character to the downside. The 1-minute change of character won't be enough because 1 minute structure would look something like this. More likely, price has already changed character on the 1 minute chart. Okay, let's say you're entering in a position, and yeah, you're in a position, you're happy, maybe you are in 1%, 2% profit, but price will just sweep you out from the trade because it reacted on some sort of 15-minute demand zone or this demand zone. That's why you have to wait for a 15-minute change of character inside of a 4-hour zone. You always have to wait for a 15-minute change of character. And for a pending change of character line, this will be your pending change of character line. Let me just change the text. Chat pending line. This is our change of character 15-minute pending line. Sorry, I forgot to type the 15-minute. So if price breaks below this supply zone, sorry, not supply zone, demand zone, and the structural low point, that will be a change of character on the 15-minute chart. And if this happens, you'll be able to mark out the supply zone that was leading to a change of character. So let's say price reacts on this supply zone. Reacts on this supply zone, creates a change of character on the 15-minute chart, and taps into this supply zone, character changing 15-minute supply zone. And this will be the 1-minute structure. Price taps into this 15-minute supply zone. And after the tap of this 15-minute supply zone, price changes character on the 1-minute chart. And if this 1-minute change of character happens also, only in this scenario, and only in this scenario, you can enter in the short trade. If all of these movements don't happen, all of these movements are missing, you can't enter in a short trade based on this supply zone. Only if price changes character on the 15-minute chart and the 1-minute chart after the 15-minute change of character. And if this scenario happens, sorry?
Oh no, I'll have a question once you're done.
Okay. So, and only if this scenario happens, you'll be able to enter in a short position, but only if this happens. Okay, let me hear the question, please.
Marcel, I've been having an issue with regards to whenever you say you're waiting for a reaction.
Yeah.
Now, what do you mean by that, Marcel? What do you mean by a reaction? A reaction being that it breaks below, creates a charge?
For example, if I'm writing on a chart or in the markup section, right? You're confused about the markups, right?
I'm just confused about the concept of when you say reaction of a supply or demand zone.
For a
like
reaction,
right now,
for a reaction, I mean, there could be two possible reactions on the supply or demand zone. For a demand zone, that could be two possible reaction. Let's say price is coming down. Price is coming down and taps this demand zone. That's why that's the exact moment when I'm saying that we should wait for a reaction. What could be a reaction? The first possible scenario is the change of character to the upside. That could be a reaction.
Okay.
If price changes character, this is our first reaction. If price can change character to the upside, in the demand example, of course, if price can change character to the upside, we could wait for a break of this zone. This could be our two possible reaction on the zone, either of a change of character or either of a break of that zone. All you have to do is wait for this reaction to happen, either if it's a 4-hour chart, 4-hour zone, 15-minute zone, 1-hour zone. All you have to do is wait. That's why I'm saying, that's what I'm meaning under the reaction on the zone.
Got you.
Okay, perfect. So, as I said, 15-minute change of character, 1-minute change of character, and only in this scenario you can entry. Let's say the other scenario, if price breaks above this zone. Let's say it respects this demand zone. We have demand zone right here. Or you could say that this could be our demand zone. We will switch to the 5-minute chart and that will be cleaner. This could be our demand zone because actually this demand zone has been already mitigated and not inefficient. As you can see, there's no inefficiency, literally no inefficiency. The inefficiency has been started from this candle. So basically this is the only inefficient candle. And there's inefficiency too, as you can see. So this could be your right 15-minute demand zone, but still this is the 15-minute change of character point. This is the last demand zone. This is the last character changing point. Okay, we will refine this 5-minute demand zone. And if price reacts on this 15-minute/5-minute demand zone and creates a 1-minute change of character on this zone. So on this zone, 1-minute change of character is enough because the pro trend in this region, on this region, on the 15-minute chart, on this line, a pro trend is bullish. Of course, supply took over control from demand partly in this region, but if price taps this demand zone and creates a change of character in the 1-minute chart, demand will be fully in control again, and the pro trend will be bullish. So if price can react on this demand zone, we can maybe target higher supply areas on the 1-minute chart inside of this 15-minute zone. Or if the break happens, the break of this zone happens, we'll be able to ride the expectation order flow to the upside. Because if price breaks above this supply zone, this decisional 4-hour supply zone, price will be on the way up to sweep the liquidity and tap the higher supply zone. So if this scenario happens, we'll be able to write the expectation order flow up to this supply zone, this extreme 4-hour supply zone. All you have to do is react. Basically, all you have to do is react. If price gives you a change of character, enter in the short. If price gives you a break, enter in the long. This is all about reaction. Okay, we just switch to the 5-minute chart, sorry, and refine this zone. And actually, as you can see, this is a perfect 5-minute zone. You don't have to refine it. This week is a perfect 5-minute zone because the break of this structure and the sweep of this liquidity has happened from this demand zone, right? Price actually changed character here to the downside. This was the last demand zone. Price changed character here. And from this supply zone, price created a flip zone. This is our 5-minute flip zone. Price reacted on this supply zone here. And from this demand zone, price broke above the supply zone and the over a structural high point, swept the liquidity from this region and created the supply tap. So this will be a right 5-minute demand zone. Okay, for the riskier, if you're trading riskier, if your risk tolerance is higher than usual, you'll be able to execute a trade after the break of this demand zone. So the break of this demand zone happens, the 5-minute break of this zone happens. You'll be able to execute a continuation trade to the downside before even this 15-minute zone, 15-minute change of character pending line happens. So once again, if price breaks below this zone, you'll be able to execute a short trade if your risk tolerance is higher than the usual. The safest version, the safest scenario will be the change of character here to the downside, wait for this change of character and the reaction on some sort of supply zone continuation, as you may know. This will be the safest version. But if your risk tolerance is higher than the usual, you can write the order flow here too. Okay, so possible scenarios. Sorry, let me just grab a cup of water, just a minute. I'll be back in a minute, sorry. Okay, I'm back, sorry. So the 1-minute possible scenario for this zone, for this demand zone. Switch to the 1-minute chart. Price steps into this demand zone. As you can see, inside of this 5-minute demand zone, we have a 1-minute demand zone also, this one. But we don't really have to refine this zone. So the 1-minute scenario will be, if price changes character on the 1-minute chart, this will be our last change character point, 1-minute change of character pending line. This is our 1-minute check pending line. So if price changes character here to the upside and creates a demand zone, which is outside of lunchtime zone, you'll be able to enter in a trade. But if price creates a zone that was leading to a change of character inside of the lunchtime zone, which will end here. So if price creates the character changing movement before this line, that will be a fake zone and you can't enter on that zone. You can't enter on that zone. But if price creates a change of character after this line, so in this price action, you could be able to execute a long trade after the change of character. Okay, but let's see the other scenario. Sorry, I didn't mean to delete this. 1-minute change of character pending line. Let's see the other scenario of price breaks below this zone. So it has a reaction, as you can see, and creates a flip scenario to the downside. So flips the zone. And not this much, flips the zone like this. If this flip happens outside of lunchtime zone again, so if this flip happens after this line, so basically the scenario will be price is ranging here until New York opens, and after New York open, it either breaks below or either breaks above and creates a change of character. In these scenarios, you'll be able to write the expectation bullish or bearish order flow. If it creates a change of character upside after the lunchtime rave zone, you'll be able to execute a long trade here up to the supply zone. If it creates a break of this zone after the lunchtime zone, you'll be able to write the short continuation. All you have to do is wait for a reaction. Does it make sense? Can you follow me?
Yes.
Yep.
Yes. Perfect.
Yeah.
So basically, what are the conclusions? What are the conclusions? What are we doing right now? Just say it, type it. Yeah.
we are waiting.
Exactly. That's what we are doing. We are waiting. And why are we waiting? One more confirmation for the waiting. Let me just switch to the window. This is why we are
News.
waiting.
Yeah,
High impact
are
news.
coming up.
High impact news in 15 minutes. All you have to do is sit on your hands and wait for this high impact news to be released. Take a walk. Seriously, guys. Go outside and take a walk if the session ends. Just take a 10-minute walk outside, refresh your mind, refresh your thoughts, come back in 15 minutes, wait for the news to hit, wait for the news to calm down, wait for the storm to calm down, and that's all. I will walk, I will take a walk too, and I will come back in 15 minutes. That's what I'm doing. All you have to do is wait, because more likely the news will push price to change of character or break up this zone. And if either of one of the scenario happens, we'll be able to ride the expectation short or bullish order flow. But until this happens, we can't just sit on our hands, right? That's the safest scenario. Wait for the news, wait for the directional movement, and enter. Let me just read the comments. Should we stop trading before the 10 a.m. news? There will be 10 a.m. news too? No. If you can find a good setup before 10 a.m., if there will be a good setup before 10 a.m., and you'll be able to enter, then enter. But for example, if the news will hit in like 10 minutes before 10 a.m., just keep trading. Just keep trading and wait for the new opportunities. But if you can find a good opportunity and you can put it in break even, then do it. I can't take a walk, where's fluid warning outside? Oh my God. Take a walk to the kitchen and back 3 times. So lunchtime exam, give a change of character. What will be the new change of character high to be taken? So, okay. Oh, there's a change of character in the lunchtime. Okay, so here's a change of character in the lunchtime. If we were uneducated and you weren't in flipping markets course and you weren't in this membership, you will thought that, oh my God, this is a change of character to the upside. Oh my God, this is a demand zone. I'm going to open a position on this demand zone. But you're in the flipping markets membership, you're in the flipping markets Discord group, and you're in the flipping markets Zoom call, and you won't open a position on this demand zone because you know that this will be fake, right? We are much smarter than this. Okay, so let's say price creates a pullback to this demand zone and breaks below this demand zone because this is a rape zone, lunchtime fake zone, right? That will be somewhere around here, a new high point that was leading to a break of this low point. So the new change of character line will be that one that caused the break of this low point and demand zone. Do we actually always do 4-hour refine on a 50-minute or only if it's unclear? Only if it's unclear, but I'm mainly doing the refinement because inside the 4-hour zone, there will always be a 15-minute zone. And inside of the 4-hour zone, that will always be a 15-minute cleaner zone that will indicate price. That will be an indicator for price for the much precise reversal point. So for example, there's a 4-hour zone. Here's a 4-hour zone. Inside of this 4-hour zone, there will be a 15-minute zone. You'll know that price will tap the 15-minute zone below the 4-hour zone. So if price taps this zone and reverses, you won't jump on a long trade because you will wait for the 15-minute zone tap, and only after that you will open a long position. This is an indicator. A refinement is an indicator. See you in New York. Gotta have lunch. Thanks for the session. See you, man. Thanks for being here.
Marcel, I have a question, bro.
Okay, let me hear. Yeah.
Let's say if we were not in a lunchtime zone right now and we saw this inside bar, how would you take this trade?
You mean the change of character to the downside? Or which trade?
I'm looking at that inside bar, this one.
Why would you look at this inside bar? This is a 4-hour zone. This is a 1 minute inside bar. You're not doing anything.
Got you.
Okay. Guys, actually the session will end now because New York opens in 5 minutes. I will take a walk and have a lunch. So hopefully this session will help for you. I really hope that I could help with this session with the higher time frame intentions and everything. So thank you guys for being here. I will send the markups. And yeah, have a beautiful session, guys. Catch a lot of pips together and have a beautiful rest of your day. Take care, guys.
Take care, guys.
Take care, everybody.
Bye.
Thanks. Bye.